everyone, and thank you for joining us today. My name is Elizabeth Allen. I'm the head of Asia Fixed Income here at HSBC Asset Management. Today, I'm joined by Scott McClurg, head of private credit, to share our insights with you. The topic that I'll cover is, can Asia fixed income markets confound expectations again in 2025? Looking back at 2024, Asia fixed income confounded conventional forecasts by outperforming developed markets. Asia credits delivered strong performance with year-to-date return of almost 6% for investment-grade bonds. High yield was relatively stronger, delivering over 15%. Indian bonds also produced a respectable return of 7.5%, as shown in the chart here. So the question is, can Asia fixed income confound expectations again next year? We don't have a crystal ball, but investors sometimes underestimate the cleansing that has occurred in this asset class over the last few years and its attractive relative value. Firstly, the Asia bond universe is now diverse across region and sectors. Secondly, average credit quality has improved, with many issuers boasting strong balance sheets and easy access to local funding. Therefore, the vast majority of Asian companies are likely to repay their debt in the coming years. This remains true notwithstanding the next Trump administration, as most of these businesses are domestically or regionally focused, with manageable exposure to the US. From a carry perspective, Asia credit yields continues to look relatively attractive at over 6%. The asset class has relatively low duration, making it less volatile than comparable markets. We are witnessing strong demand for Asian bonds from investors in the region, resulting in favorable technical support. While there could be some volatility in the months ahead, we believe that Asia credit's momentum will sustain and is a good opportunity to invest for good all-in yield and diversification. So with that, let me hand over to Scott McClurg, head of private credit, for his views.
Thanks very much, Elizabeth. As we've just heard from Elizabeth, the very strong fixed income performance and outlook continues. And how does this then impact private credit? Private credit flourishes where there is demand from borrowers not being met by traditional forms of capital. In the case of Asia, there is no one answer. There are many different economies with different needs, but a consistent theme does seem to be the very strong liquidity from local banks and local asset owners. Again, Elizabeth's just talked about this and how strong the market seems to be. This means that you have to search for the areas that are more difficult for existing sources of capital. So we've seen lots of credit opportunities funds looking for higher returns from slightly higher risk situations and opportunities. And we've also seen this play out in some markets with relation to the commercial real estate opportunities. As borrowers demand greater levels of funding and move from family or conservative local lenders, opportunities are beginning to emerge. Already in India, there is a significant and growing private credit market, a great example of how one country can develop. But we still see the opportunities when cross-border complexity is added, especially for the mid-market. Now, we talk about mid-market a lot, and really what we're talking about there is typically companies that are too small to access the traditional public debt solutions. So the fixed income portfolio do not see these companies until they get bigger. Typically, they've been local companies supported by local banks. With increasing connectivity, though, we see businesses that have debt requirements of less than 200 or 250 million US dollar equivalent, needing to access internationally supported lending. So a lot of cross-border opportunities growing across the region, for example, in healthcare or waste management, or even in energy generation. And these can be corporate or small infrastructure projects. No one size or type. So we continue to see the market evolve and expand, and we see how that fits with a very strong fixed income market. So thank you today for joining us, and we look forward to speaking to you all again soon in the near future.